Now, in UK, what you need to understand is that income tax computation, obviously, the beautiful thing about developed countries is that the tax computation is pretty simple. Like even a layman can understand what how to compute tax. All right. That's the beautiful part. Okay. Now, like I told you in the last class, that there could be various types of incomes that an individual can earn. And I'll say it again, we're first learning how to compute tax for an individual. Okay. Now, an individual could earn trading income. I'm just going to stick to basic example, okay, right now, so that you can understand easily. Let's say trading income of £40,000, and let's say property income of £60,000. Now, again, this income is for the year per annum, okay? That's, let's say your client comes and tells you that, boss, you're the tax consultant, and he comes and tells you trading income 40,000, property income 6,000, and he tells you to calculate the tax. Okay, this is how you'll do it. Please pay very close attention to what I'm going to do right now. Okay, if you miss even one step, you'll mess it up. Obviously, you can learn it through the questions I'll make you practice, but first time is a charm. That's what people say, right? So you need to be very attentive for the first time. Okay, now step number one, you will categorize these incomes. In UK, there are three categories: non-saving, savings, and dividends. These are three categories in UK. Why are they categorized into three categories? Because the rates and that stuff is different. Okay, rate is different. Basically, income tax rate is different. Okay, now savings and dividend is pretty simple to understand, right? Saving is interest income, interest coming from anywhere. For example, bank interest, building societies, let's say different kinds of loans, corporate bonds, whatever it is, right? The savings income is pretty simple, right? Similarly, dividend is also simple. When you invest in a company, when you're a shareholder of a company, you earn dividend income, right? Now that could be a preference dividend, or it could be ordinary stock dividend, whatever it is, right? It's dividend, it's treated as dividend income, right? Any income that is not classified as savings or dividend is classified as non-saving. I'll repeat. Savings income, any kind of interest. Dividend income coming from your investments in shares. Any income not classified as savings or dividends will be classified as non-savings. Okay, so that means which one of the two are non-savings? Can you tell me which of the two is non-saving?
Property income.
All right, and what's trading income?
Trading income is, I think that's also non-savings.
Exactly, both of them are non-savings. All right, so first thing was to identify what income you're earning. Second step, categorize the income into three different categories. There are only three categories, not more than three. Okay, trading income and property income. Done. Perfect. 40,000, 60,000. You add it up. That's called total income. All right. From total income, you basically deduct qualifying interest. Now, what exactly is qualifying interest? Over here, I haven't given you the example in qualifying interest, right? I'll tell you what qualifying interest is in a bit. And this is called net total income. From net total income, you deduct personal allowance, which for our fiscal year is 12,500. How much of the income are you left with? And that's called taxable income. Now I have to explain you three stories, right? 1, 2, and 3. Okay. First, let's try to understand qualifying interest. Guys, when I take a loan to invest in my business, now, you're seeing these incomes, right? Trading income, property income, employment income, pension income. Each and every income has its own profit and loss statement because they're separate incomes. So obviously separate income means separate expenses. So they have their own profit and loss statements, which we'll study topic by topic later on. Okay. The point is I've given you the net profit over here for trading income and net profit for property income. Now, if I've taken a loan to invest in the business, to invest in my business, right? That's treated under the trading income P&L because that's what my business is trading, right? Trading or manufacturing, okay? Technically, the interest on that loan should be treated as a deduction from the trading income P&L only. Why? Because the reason why I took out the loan was for trading purposes. So technically it should be a reduction from the trading income P&L. Yes? Do you guys agree to this or not?
Can you please repeat?
I'll repeat. If I've taken a loan to invest in my business, that means for trading business, for example, the interest on that loan should be a reduction from the trading income P&L. Do you agree? Not from any other profit and loss statement, not from the profit and loss statement of property income, but from the profit and loss statement of trading income. Why? Because I took out a loan for trading business.
Yes.
Yes? Do you agree?
Yes.
Similarly, if I take out a loan to invest in property, it should be reduction from the property income, right? The interest on that loan should be a deduction from the property income. Yes?
Yes.
But there are certain loans that HMRC classifies as qualifying loans, on which if you pay interest is treated as qualifying interest. And that's not deducted from the respective P&L. Instead, it's deducted from the total income. Total income is when you add all the incomes to get one income. All right. What are those loans? So you have these loans over here in the notes. Number 1, loan to buy. Oh, wait. Where is my highlighter? Well, anyways. So loan to buy plant and machinery for partnership or employment use. But the interest is only allowed for how many years? 3 years. That means for 3 years you can deduct the interest from total income, and from the 4th year onwards you will deduct it from the respective P&L only. Okay. Loan to buy equity share in an employee controlled unquoted company. Unquoted means that it's not listed. Employee control means that you are an employee as well as the majority shareholder. You have the control, right? So if you want to buy equity share and you're taking a loan for it and you're paying interest on that loan, that interest will be treated as qualifying interest and will be deducted from the total income. Third, loan to invest in a partnership. If you're taking out loan to invest in a partnership business, the interest on that loan will be treated as a qualifying interest. Fourth, loan to invest in a cooperative housing society. There are housing societies. Technically, the government is responsible for the public places and all that. But if you as part of the cooperative housing society, as part of the society, you want to invest in that society for maintenance, for whatever it is, repairs, for new construction or whatever it is, and you're taking a loan to invest in that cooperative, the interest on that loan will be treated as a qualifying interest and will be reduction from the total income. Done? Now, do you guys get this so far or not? 4 things we
Yes,
study:
sir.
partnership, employment, cooperative, and obviously there's one more thing which is not part of your syllabus. Obviously you won't get tested on it, but just for knowledge purposes, when I teach you inheritance tax, obviously I'll repeat this. If you're taking out loan to pay inheritance tax, that also is treated as a qualifying interest. That means the interest on that loan is also treated as qualifying interest. Okay. Now, second thing is personal allowance. All right. Emma, do you understand this? Sorry, Abdullah, do you understand this? Michael, you guys understand this?
Yes, sir. Yes.
I have a small doubt on
Yeah.
that purchase on machinery for partnership.
Mm-hmm.
So it says that for 3 years we can deduct it from total
Total
income, and
income from the
after that we
respective
have.
P&L. For example,
Okay.
if you're taking out loan to buy plant machinery, that means, and it's for only partnership over here, all right? So for partnership over employment use. So if it's employment income P&L. If it's partnership income P&L.
Okay,
After
after
3
3
years, that
years.
is. After 3 years, yes.
So
Within
before
3
3
years
years,
from the total income.
isn't it same? Isn't it will be the same because if it is deducted
Now
from the
you're
P&L.
talking. Now you're talking. And I was waiting for someone to identify this. When it's a deduction from the total income, you know what it's being deducted from? It's basically chopping off the last chunk of income. And the last chunk is always taxed at the highest rate. So this is a relief that HMRC has given you. When you're deducting from total income, you're essentially chopping off the last chunk of income. And the last chunk of income is the highest, is the chunk where the tax rate is the highest. So you're paying the highest amount of tax in that chunk. And that is being chopped off because of qualifying interest being deducted from total income. This is the difference between deducting from respective P&L and from total income. Am I clear now? Do you understand this?
Actually, I didn't understand
All
it.
right. Let me give you an example.
Even I didn't understand.
Okay. $100,000. This total income is made up of property and what?
Trading.
Yes. Now, if I deduct this trading income is 40,000, right? But the total income is 100,000. If I deduct qualifying interest from here, the total will be the same. Yes, I agree. All right. The total will be the same. But the relief over here is that, for example, it was 10,000. I deduct it from here. Ultimately, this turns out to be 30,000. So it would land somewhere over here, 30,000. And this would be basically shifted towards this. It would be 90,000 total, right? It will be 90,000, right? 40,000 over here is landing somewhere in the middle of the tax bracket. Do you agree? Treat this as a tax bracket. So 40,000 is landing somewhere around in the middle of the tax bracket. Yes. But when you chop off the last chunk, again, value would be 90. That does not matter. But this last chunk, this total income basically chops off the last chunk, which you will know in like another 10 minutes that it's taxed at the highest rate. So when it's taxed at the highest rate, and if you're chopping it off by deducting the qualifying interest, you're actually maximizing the tax savings. You chop off from somewhere in the middle where the tax rate is, let's say, 25%. And you're chopping off from the last chunk where the tax rate is 45%. Which one is more beneficial? 45 or 25? You want to chop off the 25 or you want to chop off the 45?
25.
Sorry? Which one would you like to chop off?
45. It
45.
kind of
45.
makes sense.
45 so that you can maximize the tax savings.
Yes,
Okay?
correct. Yeah.
So this is the case. Now, obviously after deducting qualifying interest, you get net total income from which you deduct personal allowance. Now, what exactly is personal allowance? Personal allowance is an amount allowed by HMRC to people like us, right? Does that mean if my net total income is, let's say, 8,000 and personal allowance allowed by HMRC is 12,500, does that mean I will incur a loss of 3,500? No, that's not a loss of 3,500. It's not a tax allowable loss of 3,500. Why? Because the personal allowance is just an amount allowed. It's not actually an expense. You have this 12,500 in your pockets right now. It's just HMRC does not want to tax that amount. They're giving you a relief. You understand? So personal allowance is treated as a relief given to you by HMRC. And after that, you get taxable income. Taxable income is the income on which tax rate applies. Taxable income is the income on which tax rate applies. Now, a student might ask that, sir, we talked about three categories: non-saving, savings, and dividend. The only reduction that you've shown is from non-savings. All the deductions you've shown are from non-savings. Why haven't you touched savings and dividends? Or specific to this case, I didn't even consider savings and dividends I didn't consider any income under the category, right? That's basic because in this example, I haven't considered it. But what if I would have considered savings, let's say bank interest? And let's say dividends. Now I have bank interest. I'll have to erase the entire thing, so I'll just add it over here. and dividends. So now my total income is again, I will not change the qualifying interest in personal allowance. I'll keep it as it is. Question is why? I'll tell you why. HMRC taxes the non-savings income at the highest rate. All right. HMRC taxes the non-savings income without any relief at the highest rate, which is also called the normal rate. 20, 40, 45. Look at the dividend rate. 7.5, 32.5, 38.1. Where did the savings go? There's no savings over here. There's a problem with the notes. Yes,
No, they are taxed at the normal rate.
exactly. Savings and non-savings are taxed at the normal rate. So how come I just said that non-savings is taxed at the highest rate? Savings is being taxed at the same rate. Savings income has some nil rate band available. That means an amount within the savings income is taxed at 0%, which is not the case for non-savings. Non-savings income has no nil rate band. Not even a single penny from the non-savings income is taxed at 0%. So that means the entire non-savings income is being taxed. And that is why HMRC has created a rule. That rule is that non-savings income, where is it? All right. Non-savings income will always get the first priority. There's a reason why I've written it this way. 1, 2, 3. This is the priority level from left to right. Non-savings will get the first priority for all deductions. Then savings, if the non-savings income has ended and there are still some deductions to be made, move on to savings. If the savings income has also ended and there are still some deductions to be made, move on to dividends. If the dividends income has also been gone, you've taken off the entire dividends income and there's still some deductions to be made, what do you do? Michael, what do you do? It gets wasted. Okay? It gets wasted. Now, since all the deductions are being prioritized first to non-savings, savings, and dividends, taxes will also be prioritized first to non-savings, then savings, and then finally dividends. Hierarchy will not change. The chronological order will stay as it is: non-savings, savings, dividend. All right. Now, the point is, I had enough non-savings income to deduct the personal allowance and the qualifying interest. Therefore, I didn't see the need of going to savings or dividend. All right. Now, question is, how do you tax? Very crucial. Okay. And I'm going to do it on Excel for you guys. Just give me a second. Taxable income non-savings was 87,500. Savings income was 2,000. Dividend income was 5,000, right? Tax rates need to apply. Now, if I go back to this, you see there are 3 bands. These bands are consumable. Now, what's the story behind consumable bands? Consumable band means if one category of income, how many categories were there? 3: non-saving, saving, dividend. if one category of income utilizes a band, the other category cannot utilize the same band. They'll have to be taxed at a different band. Now, the first band is the basic rate band, then the higher rate band, and then the additional rate band. Basic rate band starts from £1, ends at 37,500. Higher rate starts 37,501, ends at 150. And additional rate starts at 150 and 1 till infinity. Okay. Now, considering the bands, I just want you to take 2 minutes. All right. Try to consume it, what I've just said, and the bands, and then I'll show you the working. First of all, step number one, whose turn is it? Non-saving. Yes. At basic rate band, first it will obviously consume the basic rate band, which is up till 37,500. Yes. Right now, what I'm taxing is the non-savings income. It will consume the basic rate band, and the rate at which the income will be taxed is the normal rate, 20%. Do I still have to tax any other chunk of non-savings income? Is there any untaxed non-savings income left?
Yes.
How much?
The 50,000.
50,000. Question is, will I tax it at 20% also? Will I tax it at 20%?
No, maybe that's at
The
40%.
basic rate band, exactly. The basic rate band has been consumed. All right. Now we're at this band, the higher rate. Okay. So now any other income up till 150,000 will be taxed at 40% if it's non-savings or savings. Have I taxed the entire non-savings income? Yes. Next, savings income. Savings income has a nil rate band available. A nil rate band allows you to tax the savings income at 0%. But I'm going very slow right now, guys, because I want you to understand each and every word I say. All right. Trust me on this. Once you've understood the basic income tax computation, you'll see how fast I'll go. Because after that, everything is just rote learning. Right now is the point to understand. Okay. I'll repeat. Savings income has a nil rate band available. Now, we're standing at the higher rate band. Okay. Basic rate band is gone. Our tax law says that if you are a basic rate taxpayer, then a savings income nil rate band at £1,000 will be available. That means out of the total savings income, £1,000 will be taxed at 0%. Okay. It also says, and I'll show you where it says this. Savings income nil rate band, basic rate taxpayers 1,000, higher rate taxpayers 500. That means if you're a basic rate taxpayer, £1,000 at 0% will be taxed. That means no tax. If you're a higher rate taxpayer, only £500 will be taxed at 0%. What if we're an additional rate taxpayer?
There's no refund.
No nil rate band for additional rate taxpayers. Now, the point is, how do I identify what category of taxpayer I am? How do you think I can identify what category of taxpayer I am? Very simple. Just add up the taxable income, not the total income, not the net total income, taxable income. Taxable income is after deduction of personal allowance. What is the amount? Come on, guys, say it out loud. What's the amount?
94,500.
Which category does it fall in? Which band does it fall in?
Higher rate.
Higher rate. That means I'm a higher rate taxpayer. Okay. The max amount of tax I will pay is at the higher rate, which is 40% or 32.5% for dividend. So technically, for me, within the savings category, 500 will be taxed at 0%. Have I taxed the entire savings income?
No,
No.
1,500 is remaining.
1,500 is left. Okay, what should I do? At 20%? No, that's been consumed by the non-savings income. At 40%, because the normal rate applies to savings income as well. Have I taxed the entire savings income? Yes. And finally, now what does the law say about dividend income? What does it say? Dividend nil rate band £2,000. Does this does HMRC distinguish between basic rate, higher rate, additional rate when it comes to dividend income?
No.
No. That means it's a flat rate, does not distinguish between any income. So straight away 2000 into, sorry, at 0%. Have I taxed the entire dividend income?
No.
At what rate? You will tell me now.
32.5.
Sorry?
32.5.
32.5. Why? Because I'm still standing within the higher rate band. Okay. I haven't crossed 150. Has my income crossed 150? Not the total income, not the net total income, taxable income. Has my taxable income crossed 150? No. If not, then I'm lurking around somewhere in the higher rate region, right? So that's 32 point. So total tax turns out to be 29,075 pounds on a total income of how much? Remember the total income, guys? Sorry, that was 107,000 because 2,000 savings income and 5,000 dividend income. Do you get this?
Yes, sir.
Are you sure?
Yes, sir.
All of you, Guys, you sure?
Yes, clear, sir.
Okay, perfect. Now, I want you to simply, very simple examples, and then we'll end the class. Solve these two questions. This, please focus on the narration, okay? Please specifically focus on the narration, because the narration over here says total net income. All right. The narration over here says total income. Tax is applied on the taxable income. All right. There's a difference. So if you're given the total net income, that means, or the total income, you need to deduct the personal allowance to get the taxable income. Okay. So I want you to quickly solve this for me. I'm giving you guys 15 minutes, 7.5 for each. Try and solve this. And then obviously I'll solve it for you guys so that you can confirm your answers. Are you guys getting these liabilities?
Yes, sir.
Seriously?
Yes.
Oh, yes, sir.
Wow. Like you got it right in the first attempt.
Yes.
That's good. That's that's actually impressive. Students tend to make a lot of mistakes over here. That's good. All right. So this is about it today. Okay. Next class, obviously, I'll put in some more spice, and we'll complete the income tax computation, and we'll do some more technical questions on the computation of income tax. Okay.
Thank you, sir.
All right. No
And
problem.